Well, everybody, we are back to the normal video format, at least for today. And we saw another positive day in markets, up now for 5 consecutive days. And what a relief after 6 very challenging weeks, particularly for risk assets. Now, we're not completely out of the woods yet, though the reversal we have seen is very encouraging. And I'm going to continue reporting every day through at least mid-December because a lot of you have said that you enjoy the daily format. So, despite this positive 5 days we've seen, the month of November did close down on the NASDAQ, which broke that 7 consecutive month uptrend. Now, don't worry, if you follow Gann swing analysis, despite what we know about the 7 bar rule leading to larger reversals, historically on the monthly trend for the NASDAQ, this actually points to more upside ahead, and I will get into that after the intro. So let's not waste any time and get right into it for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a wonderful Thanksgiving. Well, at least for those of you that live in America. For everybody else, I guess I hope your Thursday was fine. Before we dive in, if you do find value in the content, likes, comments, and subscribes are very much appreciated. They really do help the channel out in these early days to get a bit more traction, and it means a lot to me personally. And I haven't been asking for that the last 3 weeks, but you guys have been so kind just to keep commenting and helping the channel out in that way. So thank you so much for doing that on the daily videos. Also, I am really bad at marketing and promotion. I'm really mostly focused on putting out these videos and putting out the content for Patreon. But someone in the Patreon group did ask me if I would do a Black Friday sale. So I just figured that out before recording this. And I put together a code for 50% off the first month subscription of Patreon. So if you are interested in checking that out, the link is down below, or patreon.com/tradingapologist. And you can put in TABF for Trading Apologist Black Friday, TABF at checkout. And if you do just want to give it a try, it isn't contingent on Black Friday, but anytime you can go over there and check out any of the tiers on a 7-day free trial. I would recommend checking out the quant tier so you can get all of the Discord access, the trade alerts, our live weekly calls to really get a feel for everything there is to offer over there. Anyway, some folks were also asking, sorry about all the housekeeping, but I figured I haven't been talking about this for a while, so I want to get to it. Some folks were also asking about annual subscription options. Patreon won't let me do that until the account has been active for 3 months. So that's going to be the last week of December, and I already auto-enrolled. So at the end of December, you should see those annual memberships, which will give you a percentage discount as well if you want to sign up for the whole year. And the last thing I will say, if you do want to see me early on a Saturday morning, because who doesn't want to get up early on a Saturday, I do have my trading education courses every Saturday morning for technical analysis, swing trading, perp trading, and so much more. If you are interested in checking those out, go to calendly.com/tradingapologist. That link is also in the description down below, along with the Patreon link and everything else. All right, that is enough of the shills, and let's get into why you're here and why I'm here, and that's to talk about markets, to look at charts, and to identify trade setups. Now, before we get into those charts, I do want to talk briefly about the market setup. And the 5 days up we've seen since last Friday are quite positive from a structural perspective. However, that 5 days up has stretched some of the smaller time frames. And even though we have much more room to run on the daily, we need to cool off on those smaller time frames. And I would not be surprised to see a pullback early next week before continuation in the broader uptrend. Now, if you have not positioned, that pullback and that subsequent higher low may be the best entry you see on many names for quite a few weeks, as it does appear that we may be setting up for a bit of a holiday rally. Now, that aside, I want to talk about the monthly close on the NASDAQ, which ended that 7-month streak of consecutive positive months. Since 1984, we've only seen 5 prior streaks of 7 months or more, and only one of them ever ran longer than 7 months. I think it got to 10. But here is the part that really matters when we see these long streaks. Every single time one of these streaks has ended, the NASDAQ 100 was higher 12 months later. Not most of the time, every single time. In other words, the end of the streak has historically marked a reset, not a reversal. And if we look at this chart, you can see that all prior instances marked out by these vertical lines lead to continuation. It's a breather before the next phase of the trend. And this lines up beautifully with what we saw from the Zweig breadth thrust signal that fired back on April 24th of this year. Zweig breadth thrusts, as well as being easy to say, often produce a sharp surge followed by a mid-move correction and then a second leg higher. And that's exactly the structure we're in currently and potentially coming out of right now. But just remember that 2026 will most likely be marked by greater volatility. I'm still expecting at least 2 larger violent pullbacks next year, so we have to stay alert and nimble in our positioning. However, if we are truly in late cycle and if history is any guide, the next 6 to 12 months could be the more powerful part of the cycle compared with the rise that we saw from April. I know that sounds a little bit crazy, and no doubt there are many cracks just beneath the surface, and we are nearing a bigger reset. But we also have so many things aligning currently as tailwinds with liquidity, rate cuts, other midterm election year stimulus that all of that could really give us the fuel for a meaningful blow-off move. So, of course, we have to react to what the price action actually does, but that has been and remains my base case, and I'm positioning accordingly for more of a move next year, despite most people thinking that we are already going into a bear market. So with all that said, let's get right into the charts. All right, starting on the S&P 500, and you can see that today we did move up, but the price action was a bit more muted, fighting this trend line and finally breaking out above that. And we got over our last little line of resistance. We wicked above it and after hours and then closed right on it at 68.60. And our last real hurdle overhead, I would say, before testing all-time highs is kind of that 6,900 level here on the S&P 500. All week, we've seen a broadening rally with this outperforming the NASDAQ, but in terms of being overheated here on the 4-hour, you can see how mean reversion is deviated to the upside. We are starting to get above 70 on RSI. Now, this can become more elevated, so we could still run a bit longer, but we are closer to the end of this local move than we are to the beginning, and a little reset would be healthy. If we pivot over to the daily, you can see that the daily still has plenty of room to run to the upside on both mean reversion and RSI, but you can see those 5 candles straight up, which is rather unusual. We don't see that often, I suppose, right here. We had a bit of a start, 1, 2, 3, 4. Oh, no, we have not gotten 5. 1, 2, 3, 4, 5. Okay, we had it right here. But it is unusual, and the size of the candles should be noted too. But we're above really all our resistance levels, above our trend line. So we're looking good here. If we do pivot over to the NASDAQ, you can see that the NASDAQ is still a little bit weaker. The equivalent level would be at about 25,900. This is the equivalent point that the S&P 500 is already up to. So this just speaks to the broadening rally and how we already got above this pivot high from the 5th of November, which the NASDAQ has not done, but we are above our major horizontal levels. We got above that 25,400 level that we've been talking about. We broke above our trend line as well, and we are also just starting to touch 70 on the RSI on the 4-hour. We have our mean reversion dot. So you can see that bit of overextension as well, or getting close to overextension. Again, this can run a bit longer, but the daily is set up so similar to the S&P 500. Plenty of room to run, those 5 days straight up, and just a little bit of a reset, a little bit of a pullback to cool off those small time frame charts would be good to see for further continuation. All right, let's move over to SMH, and I just realized that I was big from that rapid fire chart session we did, so I'm going to make myself a little bit smaller here to not eat into the charts as much. But looking at SMH, we also got above our trend line. We got above this local swing high right here at 350. So good sign of strength. We're also getting a bit extended on the 4-hour, but we have a bit more room that SMH can run because the semiconductor space has been lagging behind just a little bit. The smaller names have been running, but names like NVIDIA have definitely been struggling since the news of that Google and Meta partnership. In terms of overhead resistance, this next pivot high at about 360 to 363 Confluence Model Center Cloud would be our major level of resistance overhead for SMH. And let's just go over to the daily really quickly. And we have plenty of room to run in terms of the daily RSI and mean reversion. We wicked below this support trend line, but we got back above it really quickly. So I suppose we could say that's deviation. And on the daily time frame, we are back into the confluence model upper band. So a good sign of strength. All right, let's get into some of the individual names. I'm just going to stick on the 4-hour. NVIDIA here, we are back testing this trend line. The 1 week thing I would say for NVIDIA is that we are now staying in the 4-hour lower band. So this is suggesting that NVIDIA could correct a little bit more compared to the rest of the market. And we still have that target from this descending triangle, which would have us land at about 147. And let's just compress this again, because I believe that came in line with a previous consolidation zone. It does. It comes in with the top of this previous zone here. So I would say at about 150, really, support's going to start coming in. Just looking at this VRVP cluster right here and the top of this previous range. I don't know if that's going to happen. It's hard for me to imagine NVIDIA would sell off quite that aggressively if the broader market is running, but perhaps this might correspond to some kind of news-driven event, but we will just have to wait and see. And sorry, I'm moving that around terribly because I'm trying to erase this little dot right here that is bugging me on the charts. Oh, OCD is a beautiful thing, isn't it? If we do pivot over to the daily for NVIDIA, we are very neutral in terms of mean reversion and RSI, and we are just finding support here on the Confluence Model Center Cloud. So while things look a little weak on the 4-hour, there is a little bit more structural strength on the daily. The one thing to note is that we are getting into a bit of a volume gap here. So if we do drop below this 168 level, we don't have much supporting us until we get to that 150. So definitely something to watch out for. All right, let's look at some of the other semiconductor names really quickly just to see where strength is lying. And you will notice that we're starting to get strength emerging more in some names than others. So MU, nice V-shaped bounce. There's a little bit of resistance around 242, but we've still got plenty of room to run on the daily. TSM, in contrast, has not bounced quite as aggressively and hasn't gotten into the Confluence Model upper band. You can see we're still finding resistance there for TSM, so that's having just a little bit of a harder time. SNDK, SanDisk, that had a great bounce from the Confluence Model Center band. Hasn't bounced quite as high as someone as MU, but if we go to the 4-hour, you can see that this is about to make a decision. We're just in this tightening range and we are about to break out, and we are also reset on the 4-hour. So this could see a move next week. And then WDC, Western Digital, which has been a strong performer lately. It's coming up into the Confluence Model Center band right now, and it dropped a little bit more than SanDisk, but it is also doing something similar where it's just compressing and figuring out which way this is going to go. You could make an argument that this was your downtrend right here. It's not super clean, so I'm not going to go with it. I think this is just going to keep compressing and make a decision next week. All right, gold broke its symmetrical triangle pattern to the upside today, and silver has been outperforming as well, actually silver being stronger. So there's still that flight to hard assets. The symmetrical triangle pattern price target would be pointing to 6,700. So impressive for gold there. If we go to silver, and you can see silver actually has been stronger. It retested the high of this range once before, had a breakout today. And the price target on silver, the lower one, is at around $63. And if we do 100% extension, I think it was getting up to 71. So from our current $56, quite an impressive potential move for silver. All right, VIX saw another down day today and then just a bit of a pause day yesterday as markets were closed on Thanksgiving. So VIX dropping off is a good sign. And then we haven't looked at the dollar in a while. And the dollar has been in an uptrend in terms of higher highs and higher lows this whole way. And we are in the Confluence Model upper band, which would suggest that we might take a move higher. And we're right on support right now. If this support breaks, we could have a double top in play, which is coming right in at that even 100.3, so not quite even, a little over 100. But this corresponds to some previous resistance in the past. And if this breaks down right here, which would be unusual because we normally expect that, well, I guess you could say these are our two swings in the upper band, but normally they're a bit more dramatic. If this breaks down here, this would be good for risk assets is the point. And then we can measure out that double top, which would be getting us down to about that 98. Let's just measure it out officially. If this is a bit of a double top for us, that would be getting us, right down here to 97.5. So my guess with 98 wasn't too far off, but that would be good for risk assets to potentially turn this uptrend around with this surprising strength that we have seen in the dollar. All right, Tesla continues to climb higher, still has not flipped the trend necessarily on the daily, but it looks like it's about to do it. I'm still watching this trend line breakdown right here that we broke down from this long uptrend on the 6th of November. Are we going to reject from that and continue down? And the only reason I'm saying that, and this would be hard to imagine with the rest of the market being strong, but we never really hit a reset level, which for Tesla in a strong uptrend is about 35 on the RSI, 30 if it's a much more dramatic downtrend. And someone in the community actually asked me, why are you paying attention to this underside support trend line and not necessarily considering this overhead trend line, which Tesla broke out from, which is a good sign. This is bullish on the daily, but we're stuck between these two right now. And because this underside support has been holding us up since early June of this year, and this overhead resistance has only been in place since the middle of September, I'm putting slightly more weight in this secondary trend line, but we can absolutely keep these both in place. And there's a world in which we could reject and then find support on this and backtest it and then eventually break through. So something like that is a play to definitely watch out for. And RSI has a strange way of respecting these trend lines. All right, let's take a look at Bitcoin. And you can see that we broke our daily RSI downtrend. We still have this downtrending resistance overhead and our confluence model center cloud. So we have that to look out for, and that resistance would be coming in at around 97 to 98K, depending on when we intersect these. This trend line we're obviously going to get into before the confluence model center cloud, but plenty of room to run on RSI and mean reversion on the daily. But I want to look at the 4-hour because the 4-hour is our near-term guide. And you can see that we broke back into the confluence model center cloud on the 4-hour, but we are overheated now with mean reversion and RSI. So the question is how far is this going to reset? And if we pull back, it would be good to see support coming in at about $86,500. I wouldn't want to see too much of a drop below that for us to maintain this structure and hopefully bounce away from there. So let's see what this does over the weekend and into the Sunday evening close. And if we pivot over to Solana, Solana on the small time frames is doing exactly what we talked about, I think in the last video, about potentially rejecting here at that 144 and making an inverse head and shoulders. So I'm keeping my eyes on that. We also have mean reversion dots. We're cooling off on the 4-hour RSI a little bit here. We wicked above it, but we weren't really able to sustain above that 60 zone on the RSI on the 4-hour. So those are definitely things to watch out for. There's still weakness in crypto. And if we go over to the daily time frame, you can just see that we obviously have a lot of room to run on the daily time frame. But we have our next trend line overhead that would be coming in. Well, depending on when we intersect that, let's just project this out. I mean, we might be intersecting this trend line kind of right about the time we're testing that 144 level or so. So something to keep an eye on over the next couple of days. All right, let's look at some of the fintech names. Coinbase made a nice bounce today, but then rejected at the 200-day moving average. It's made a nice bounce the last few days. But the daily trend hasn't turned yet. There is a chance that we could just reject from this and take another swing lower in the lower band. And if we're just going to the 4-hour for contrast, the 4-hour did break a little inverse head and shoulders, which is targeting a bit higher price target here at that 294. And just to go back to the daily, 294 would be coming in oh, right about actually where our confluence model center band would be. So very possible to hit that. But if we're looking at the 4 hour, the 4 hour at that point would be getting a bit overheated in terms of mean reversion and RSI. So something to watch out for one more potential move lower on Coinbase. And if there's some broader market weakness next week, maybe we see that and you do get an entry. And then if we go to Hood, which has definitely still been the leader of the space, Hood had a remarkable move this week from, all the way down at about 102 all the way up to 130, so over 30% or almost a 30% move this week. On the 4 hour, we're starting to get a bit overheated, and we are also into this trend line that we just broke down. We have 7 bars up on the 4 hour, so it seems like this is going to cool off, and we would then want to see a bit of support step in at around 116 again to see if it can hold that level. And if we do look at the daily for Hood, that trend line's also coming in roughly where the confluence model center cloud is going to be in a couple days time. So maybe this can get up to 135 or so, but I would expect a bit of a cool off. And then on the daily, this still has a decent amount that it can run. All right, let's get into a couple of the active trades from the trade alerts this week. First, we have HIMS, where we got into position just a couple of days ago on the trend line break. We're moving up nicely now. We are most likely on the short time frames going to find some resistance here at around the $40 where these previous swing lows are. Makes a lot of sense, and that's where the confluence model center cloud would come in. Maybe we take another move lower. But ultimately, from this recovery on the daily time frame, we're anticipating we're going to get at least to about that $46 level at the 200-day moving average. And if we look at the 4 hour in contrast, you can see the 4 hours starting to get a bit overheated. So if we move up into this next week and then come back down again and correct, even test as low as the trend line, I would be fine with before resetting. And we're saying about that 46 because that's where our 200-day moving average is. And then the confluence model center cloud, we'll have to see where it is, but somewhere in that neighborhood. And it also aligns with this zone right here where we made these lows at 46 and found just a lot of congestion in that area. So trade's going well. Might reject next week, but ultimately I think looking at the daily time frame, we've got more to go. All right, CleanSpark had a fantastic move this week, and this was one that we were in a trade on. I got in already over here, and now we recovered. And this options trade, which was for March 20th, I believe, of 2026 is the expiry date. This was up 104% this morning as we were getting into the 50%. So I sold some of my position. I expect we're going to see a cool off based on the 4 hour time frame and then get a reset and attempt to break through again. So I would reload on options, but 104% over a few days is not too bad there on CleanSpark. So that volatility definitely came in. And here's the daily. We've got more room to run on the daily, but I would imagine we come back at least to the 382, which is sitting at $13.27 to close that gap. Maybe even a bit below that down to about $12. But let's see what happens next week with the broader market. And if we just switch over to some of the other miner names, if we look at Cypher, Cypher has had a wonderful correction, has moved away really quickly from those lows. And Cypher and Iron were kind of neck and neck for a while. Actually, Iron, I would say, ran first. But now you can see that Iron has not been nearly as strong on this bounce. Bounced off the 50%, sure, but has not been able to recover. And then something like Mara, for instance, or actually, I'm sorry, not Mara. Mara has been down in the dumps. Something like Riot is what I wanted to look at. Riot, not as strong as the other two, but it has definitely bounced and seen a stronger move away and has been making higher lows. So try to find that relative strength in markets, and this has a lot of room to run as well on the daily. The other name that is showing strength amongst the miners is Wolf, almost back to all-time highs, but you can see the bounce out of here was fantastic. You could even argue that there's a bit of a double bottom in play here at around that $10 mark, bounced all the way up to almost $16.10. Wow, today. So stronger names, weaker names, identifying that strength is going to help you because this next leg in the market into 2026, it's not just going to be as much about indices or sectors. It's going to be about picking the names within sectors. So picking the winners within semiconductors, within the miners, within quantum. Speaking of quantum, quantum has been relatively quiet the last couple days. It's just been consolidating and coiling, but watch this because the charts are oversold. They just haven't made their move yet. I honestly need to position in some of these names, but take a look through the quantum names to identify that relative strength. But let's look just through some of the tech giants real quick. Microsoft had a bit of a recovery today, and we're just looking at these on the daily, actually the last 2 days. But Microsoft is into that key level of resistance at around that 490 level right there. So you can see previous lows becoming new highs. And then we have the Confluence Model Center Cloud coming in. So it still has some proving to do, but the recovery the last 3 days has been strong. Google has just been consolidating, cooling off slightly, I suppose, but has not been doing much the last 3 days. And then if we go to Amazon, Amazon in contrast has had quite the bounce. It's about to flip the trend here on the daily. I imagine we'll get some resistance between 236 up to 239 as a bit of resistance, and then it'll try to resume the uptrend from there. Plenty of room to run on RSI and mean reversion. And Meta surprised me today. I thought it was going to have some more resistance at the 50% level, which the 50% level for Meta is at that 640, and it blasted right through. Now on the daily, we've got the 200-day moving average coming in, the Confluence Model Center Cloud, so 662 up to 675. That's going to be the hurdle, and if we can get through that, then I'd be looking for the gap fill to take place. So keep an eye on Meta. If we do look at the 4-hour, a lot of these charts on the 4-hour are getting overheated. But even based on the 4-hour, this could keep running, but a little cool off would be healthier before the next leg higher. All right, and just a couple chart requests to end the day. We had one request for Circle, which bounced wonderfully off of a fib extension and fib support here at $64, got all the way back up above $80 today, which percentage-wise is quite impressive. I know it doesn't look much on the chart, but almost 30%. It still has a lot of proving to do, and it is getting into a bit of resistance here on the daily. I would say look for a pullback, but even on the 4-hour, even though RSI is getting a bit overheated, mean reversion has room to go. If this does pull back and it tests the Confluence Model Center Cloud, so even if we have a move higher and pull back and test these previous highs, I would say around that 74 level, low 70 level would be a good entry on Circle if you want to try to play this recovery, and the trend has already turned on the 4-hour. All right, last request, we'll look at ZEC, and first let's draw in our fib level from our consolidation range low so we can get a feel of where we could potentially anticipate some support. And we just got into the Confluence Model Center band. Don't love that we broke down here, and we do have the 50% for support at 390. If we go to the 4-hour just to see a little bit more, also on the 4-hour, we're just into the lower band. So the question is, can this get out of here quickly? If we can get out of here quickly, great. But if this does end up languishing, I would imagine at least one more swing down to test around that 50% level, around the 390. We are oversold on the 4-hour, but things can always get a bit more oversold. And if we are looking at this in terms of support, you could suggest that there is a falling wedge going on here. It's not the cleanest trend like that. Let me try just based off of these little peaks here. That might be a little better. I guess for all intents and purposes, you could use either one. They're pretty close, but you could track this as a bit of a falling wedge to see if we get that breakout to the upside. But it has to prove it right now. It's, in the weak part of the chart that suggests a bit more downside. But if this falling wedge breaks to the upside, then you have your targets. And, if Bitcoin and Solana make a move this weekend, that would be a good sign as well. And the only other real things to watch, I would say, is you don't want to break this pivot low. Not only because that would put you in a downtrend, but there is a double top in play right here. So if you break that intervening low, then you have some lower price targets to the downside. So that's something just as a bit of caution on ZEC to watch out for. Man, there are so many more charts we could go through, but it is late. I have classes to teach early tomorrow, so I got to call it a night. But I did want to look at LAES real quick because that had an interesting setup to watch on Monday. And, you know, there are a lot of charts like this right now where they are finding support at, say, the 200-day, or if you're on the 4-hour, they are bouncing through the lower band on the 4-hour, just getting back into the center band. So if you do have the InvestAnswers confluence model, this is an ideal setup. Oversold conditions on the 4-hour RSI, mean reversion dot, getting back into the center band, that's a very high confidence entry. But if we are looking at LAES, it just got back into the center band, and we've got an inverse head and shoulders pattern going on right here that we're just holding above the neckline. So you've got left shoulder, head, right shoulder right there. And if we map that out, that actually gets us right into our 50% level, I think, for our next resistance line. Let's go back to the daily. I have my drawings turned off to just be on the 4-hour. Okay, we'll extend this out. So that gets us to right around our 50% for LAES, which corresponds to some of these previous pivot lows. Makes a lot of sense to get resistance there at that $5.60 mark, but that would have us from our 440 up almost 30%, right? 26% to the upside. So not a bad move. Something to look out for next week, particularly if we pull back a little bit and find some support before bouncing up to that target. That could be a great little recovery play there. And we just flipped blue on the daily, on the 4-hour for a quick 25%. And we still have room to run on RSI and mean reversion. All right. Sorry I can't get to more charts today, but you know what? There's always next week, and I'll do another one of those rapid fire segments like I did on Wednesday. Because it sounded like you guys enjoyed that. All right, that is it for the charts. As with every weekend, watch the open on Sunday night to see how markets are doing after the weekend. If we do get a gap up over the weekend, I would not be at all surprised to see selling at the open on Monday. If we do happen to be flat and then end up rallying again on Monday during the trading day, I would expect that selling to finally land on Tuesday or Wednesday of next week to get the charts to cool off a little bit on the short time frames and to give us that higher low. So if you are not in the positions you want to be in, your job this weekend is to identify the names you want to be in, look at the charts, and have a plan to enter at the appropriate levels so you are ready to strike instead of reacting when the market actually makes its move. You want to be prepared and have that plan. I hope you all have a great weekend. I'll see you on Monday. Bye for now.